What's up, everyone? It's Eric with Option Edge, and I'm coming at you late night, and I'm looking at Camber Energy, CIE, and looking at this stock. Had no idea that this was such a popular meme stock, but it makes sense when you look at where it came from. In August, it was down at 33 cents and topped out at almost four and a half, almost close to $5 at one point. So yeah, we're talking about almost a 10x return in this thing in a very short period of time. Since then, in this past week, this thing has taken an almost has taken a huge has made a huge move to the downside. Traded has halted like 13 times due to the volatility, and with volatility comes increased option premiums, and that gives us a chance to sell high premium and make some money maybe. This trade isn't going to be for everyone because there's a lot of stuff that's been happening with this company. So recently, what really sparked this massive sell-off was a short report came out by a company called, let's see where it says, Carousel Capital. Came out with a short, announced their short position, then had a large short report. And here it just sort of lists all the reasons why, talking about why CIE isn't quite as good of a company as they make us believe. So yeah, if you want to read this, I can put the link to this article in the description. But to answer this, so a lot of people, I don't really go on Reddit that often, but I just checked out, since this is such a highly talked about stock, I just went on Reddit just to see what people are saying. So this is what was pinned to the top. So this is what this person's saying. After low-rated, morally dysfunctional Carousel Capital unloaded on Camber Energy, James Doris pushed back hard. He did a press release within the hour, standing his grounds, uploaded a YouTube video explaining CIE's position, and today released two 8Ks, which they're just financial statements. One stating that there will not be a reverse split, and the other financial statement of business acquired of Viking Energy Group Inc. During trying times. We need a strong person. Okay, so here is, I can show you what the this is James Doris, CEO. So I'll let this play for you guys, and you guys can let me know what you think.
Last week, there was a document circulating over the internet suggesting Camber initiated a $150 million public offering. That document was totally false. This week, there was a short report circulating over the internet with a number of allegations. Both of those items have been referred to our legal counsel. We'll get the appropriate advice and proceed accordingly. We don't get involved in the trading of the company's public stock. I have my own personal views on short selling. I think it should be illegal, but that's for others to deal with. We're just focused on the business. Camber's majority-owned subsidiary, Viking Energy, it's a publicly traded company, full reporting issuer, current with its filings, available at any time for review. The audit situation with Camber, as I explained before, it was inefficient for the organization to have two auditors. We dismissed Camber's legacy auditor for efficiency reasons, and Viking's auditor assumed carriage of the Camber duties as well. So they're getting up to speed, and it's our intention to have the public filings current at the Camber level within the required time frame. We're excited about our business. We have to continue to improve, and that's what we're focused on every day.
So that was addressing a couple different things. So if we look to this article, this sort of highlights what the short seller was saying. So they were saying the company's accounting firm was fired. James Doris, the CEO, just told you why they did that. They had two accounting firms, and one of them they no longer needed, so they stuck with one and let go of the other one, which makes logical sense. And another part of this short report talks about how Camber Energy's only real asset is a 73% stake in Viking Energy, a company with with ongoing concern warning, a going concern warning, excuse me. So, and then he addressed that Viking Energy, that their financials were fine. So, you have the short report on one hand, then you have the CEO addressing it. So it's like, who do you believe? But I will say that historically, these short reports tend to be pretty I I don't know what the word is, but they tend to try. They're just trying to make a quick profit. By they publish these reports, they short, people react, and after the short report comes out, and it's sort of like an easy way to make money. And I feel like it isn't very moral because a lot of times they really stretch the truth. I've been involved in a company that had a short report come out that just totally lied about everything, and our company's stock really took a tumble. And then when the dust settled, our stock rebounded completely, and it was all basically everything that they said was hearsay. So that's just my 2 cents about short reports. So on to the option strategy. So I was looking at, so this stock not too long ago was trading at, let's look at the week, was trading almost at $2. Just a day ago was in the $2 range. So I was actually selling the October 15 $2 puts, $2 strike puts for a pretty big premium. And you can see that the break even, my average cost, I sold a couple of these, sold one here, a $1 put. My average cost was probably about 90 cents. So that puts my break even at $1.10. So this would only cost $200 in cash to secure this put, because this is the $2 strike. And as long, if you were to sell this right now, as long as CEI stays above that 85 cents, then you would make money. Obviously, if it's below the $2 mark, you're going to get assigned stock. But if the premium, you're getting premium, you're getting compensated with premium. So that's why the break even is here. So let's say if the stock went to $1, you would profit 15 cents on this trade, and then you can come back and sell calls in November, and hopefully, you can hopefully there'll be a little bit more juice if the stock climbs. So that's what I'm thinking. And this trade, like I said, isn't for everyone, but I look at this thing and I look at the premiums and I say, hey, that's some pretty fat premium with that doesn't take much capital to secure it. And I opened this trade a day ago, and let's see, tasty. So this thing yesterday had a IVR of 60. Today it's 23, so it's down. But that just shows you that there's some juicy premiums involved here. So that's my trading idea. Like I said, this is not for everyone. And yeah, that's it. And as always, this is for educational purposes. And if you like these videos, please like and subscribe. Alrighty, peace.